and gentlemen, a very warm welcome to you on Business Today Television. The markets are facing a dilemma of consecutively falling rupee, down for the fourth day in a row to a record low of 90.12 versus the dollar, and that's acting as a very strong resistance for the broader markets to reclaim their previous record highs. Remember, on Monday we had a blast, 26,320, and from that level onwards the Nifty is facing continuous selling pressure, more because of the way the rupee is moving. To discuss this and a lot more as far as broader markets are concerned, we are now joined by the one and only Mr. Dinshaw Irani, CEO of Helios Capital. This is amongst the youngest AMCs that is there in the booming world of mutual funds, and the AMC also celebrates the second anniversary of its flagship scheme, the Helios Flexi-Cap fund. We'll be discussing that in a lot more time. Namaste Dinshaw ji, as always it's such a pleasure to host you. How do you see sentiment against this record low of the rupee, and of course the continued absence of the Indo-US trade deal? Is this something that's bothering the market?
First of all, Chandraji, thank you for having me on your show, and a very good morning to you and your viewers and your team. So basically about the rupee, I think it was last year when all the other currencies were falling against the dollar, our fiscal tightening and monetary tightening held on our rupee to great extent against the dollar, right? So I think that those excesses are coming back to hurt us this time around. But having said that, 90 was probably, I think even the RBI won't have calculated that this drop will be that sharp. And I think it's a culmination of a few things, right? Yes. I mean, the trade numbers that came out, they weren't that exciting. The production numbers that came out weren't that exciting, and I'm sure that is playing a bit on the sentiments of the rupee itself. And obviously the overhang, big overhang, that is the trade deal. Don't know when that's going to happen, but definitely not before Mr. Putin steps back to Russia, I'm sure. So there's like a week's gap now left before something can be heard on that front also. So I believe that all is playing on it, and I don't think so the sentiment is that negative today, because frankly, I mean, the only impact that it will have, or a big impact that it will have, was on the inflation, right? Because we're a deficit country in terms of trade. But fortunately, inflation is at such a low number that I don't think the RBI would be now so worried. Obviously, they will be bothered about the rupee hitting lows every day, but not on the inflation front at least, but maybe on the trade front. So having said that, I think, yeah, things are looking not that great on that side of the story. So.
Okay. Mr. Irani, do you think the fall of the rupee to about 90 versus the dollar is in line with what the RBI hoped it will, or is this something that's escaped the scrutiny of the RBI? It also means that there won't be a 0.25% rate cut in the forthcoming credit policy as the markets were expecting.
So actually, Shailendra, see, the point is that the rate cut, I don't think the rupee depreciation will impact that to an extent. They will be looking at the data, the domestic data. As I said, that they got enough leeway. There can be enough reasons for them to increase, and maybe rupee is not the only factor that they'll be looking at. And having said that, I think if you had looked at the reel was already pointing to these kind of levels. In fact, even today, the reel is much higher. The real effective exchange rate, which we were following till not so long back, is still much higher than what it is. So I'm sure it didn't escape RBI scrutiny at all. In fact, I think it was maybe RBI's way of looking away at the time, because they also want the rupee to come off on a very systematic manner, not sudden jerks. But I'm sure, as I said, that 90 was not a jerk that they were expecting. But I don't think that's bothering them as of now, because on the fiscal front and on the monetary front, they have enough levers to take care of things. So I think that may happen going forward. So I don't see that being the sole reason for RBI not to cut interest rates. As I said, that on the demand front, they want demand to be pushed, and there's enough liquidity in the system for them to do that. So maybe I won't be too surprised if they undertake a 25 bip cut.
Okay, fair point. Let's now talk about better things in life. We've had a slight problem with the rupee for the last 4 or 5 trading sessions. The GDP number 8.2, highest in 6 quarters, and yet the market refuses to sort of move up. What do you think is troubling equities?
Actually, Shrinder, so that 8.2, it was a surprising number. It surprised all the economists, but I think they underestimated the stocking that happened pre the GST rationalization. I think that is what drove those numbers up, because there was a lot of inventory push happening in the market. So maybe that was what I think the market saw through, probably. But having said that, I don't know why the markets are, I mean, we are also very flummoxed, because if you look at the quarterly numbers, which the market should be tracking on a regular basis, I mean, economics is something that we leave it to the economists. Normally we track the actual earnings and stuff like that. We were quite excited by what we saw in the quarter. So if you break up the earnings market cap wise, the large caps, I'm talking about the September quarter now, the market cap or the large cap guys saw 10%, which is 100 stocks. The 150 after that, which is the mid-cap group, saw 25% earnings growth. And the last of the slot, which is 250 small caps, they saw 37% growth. Albeit it was on a very low base of September last year. But the fact is that these are exciting numbers. I don't think anybody had picked those in, and there was an upgrade happening. So frankly, I think the overhang is mainly because of the skepticism that we normally suffer from. We talk about geopolitical tensions, we talk about tariff rates and stuff like that, which obviously will get sorted out in the long run, right? But for the moment, I think everybody is very skeptical on the retail front. So.
Okay. These are cycles in life, as in markets. We hope to sort of ride them through with hopes that earnings will improve from here on, and perhaps the rupee will now start appreciating versus the dollar. Let's look at the second anniversary of the Helios.
I don't have any doubts. That the earnings will grow from these levels. In fact, internally we are looking at the December quarter being a mid-teens kind of growth quarter in terms of earnings. And March will always be a very strong quarter. And by the way, we've got 3 very low bases to show earnings growth from. And as I said, the easing on the fiscal and the monetary front that has been undertaken by the government and RBI in tandem, I think that'll go a long way in easing the demand and stuff like that.
Okay, fair point, sir. Let's now look at the internals of the Helios Flexi-Cap fund. As I pointed out, Helios AMC is a company that started business over the last 2.5, 3 years or so. Their first product was the Flexi-Cap fund, which is their flagship, 4,800 crores in AUM, and the returns since launch have been very, very good, and they need to be appreciated against the backdrop of nearly a flat 15-16 months that we've seen the markets between September 2024 and now December 2025. Returns since launch are 24.66%, and a lot of internal data will be right there in front of you via graphics. Dinshawji, this was one of those great performances that we've seen coming in from the Flexi-Cap space. What do you think are the 2 reasons why you have this strong performance over the last 2 years?
So, Sharindar, actually, it's basically our philosophy, our investment philosophy, which helps us in identifying quality stocks which have growth built in, and obviously at a value which is very appealing, right? I mean, in fact, our philosophy is we call it elevation investing philosophy, because we first reject stocks on bad factors. And why we do so is because you know what is bad. I mean, the you know a promoter is bad. You know the valuations are bad. You know that industries are bad. But you can't just conclude that the industry is good because it's good, right? There's to be a reason behind that, right? So it's easy to identify bad, and the absence of bad is what makes it good, right? So that's what the whole philosophy is about. So we have these 8 factors on which we analyze each and every stock that comes to our attention, and these 8 factors keep rejecting stocks. And by the way, these 8 factors were not dreamt up by us; they were basically evolved over time, looking at the underperformers in the market. And we realized that even one of those 8 factors is enough for the stock to underperform. So basically, the what is left behind after this analysis, of this funnel analysis, as we call it, when you pass through that funnel and whatever is finally listed out, I mean, makes it the final list, investable list, that stock, the strike rate is much higher because here now you have a stock which has got good quality management, good accounting, long-term growth is sure, and valuations are looking fairly reasonable to not so stretched, right? So that's how the pool works out. So your strike rate moves up appreciably, and that's why I think
Okay.
it's not only the outperformance in the index, but even when the markets are falling, this will ensure that you fall less than the market, right? Because quality normally doesn't collapse. Quality falls very systematically in a weak market.
Absolutely.
But when the run up happens, you run up. You try and catch up more than the market move up. So that's what we work on, and hopefully, I think that's worked for us.
Okay, I'll request the viewers to kindly pay attention to the 6 months return. Although, as a fund holder, you don't really look at that shorter duration. Nevertheless, this is a 2-year-old fund, and in the 6-month period, Helios Flexi-Cap has given a return of 11%. It's double the average return of a equity Flexi-Cap fund, which is 5%, and of course, it has also handsomely outperformed by at least 100% the return on the BSC 500 index. Now let's look at the portfolio. A large part of the portfolio, the concentration of first 10 stocks is about 34%, and look at the way the top 2 holdings have moved, which is HDFC Bank and ICICI Bank. Over the last 6 months and 3 months, at least in ICICI Bank, there has been an increase of holding. Financial services, Mr. Irani, has been one of the finest hunting grounds for Helios and your earlier avatar as well. I'm talking about Alliance about 25 years ago. How do you see the financial services space at this point of time? You are mildly overweight compared with the category average.
Actually, so Sharinder, we were massively overweight, but became mildly overweight now because we moved away. With RBI cutting off interest rates, we were very cognizant of the fact that the NIMs will have an impact, right? So that's why we reduced our weight in banks and probably increased our weight in NBFCs, because NBFCs normally benefit in such a scenario when the enough liquidity there in the system, they can raise money easily and at very cheap values, and also lend out at a very exciting rate. So that's why all the mix change, and that's why the weight has got quite compressed as compared to what we were probably earlier. But having said that, we still overweight that sector. The fact is that financial services is the backbone of any economy, right? That is the one given one, and especially an emerging economy like ours. So if you look at any other emerging economy, which fortunately for us, it was only one, which is China, which went through this phase that India is expected to go through in the next 5-10 years. The biggest beneficiary was financials, right? And mainly because not only do financials help out in the capital expenditure or the working capital expenditure and stuff like that, but they also help out in aiding consumption. And actually, the next big overweight for us is consumption, and that is mainly because of this reason only, that consumption has to kick in, because if the economy has to move, it has to be only solely through consumption. You've seen that, right? Exports, in fact, have negatively contributed to our GDP, I suppose. And obviously, the capex can only happen to that much. It has to be consumption which has to drive economics. So that is why we remain overweight BFSI as such.
Okay. In fact, a lot of quasi-consumption theme is also visible in the top 15 holdings of Helios Flexi-Cap fund. You have Eternal, you have Paytm from the internet space. There is Bajaj Finance, perhaps India's best consumption stock, Car Trade Tech, and of course Hero Motors, as well as the two banks, SBI and Kotak, making up the top 15 picks at Helios Capital. Mr. Irani, one of the earliest entrants in the internet space has been Helios AMC. That trade has worked very, very well for you. At this point of time, how do you analyze the digital space, given that it's given phenomenal returns over the last 15-20 months against the backdrop of a broader quiet market?
So, Sharida, we are very on the ball here. I mean, because this is one of the bets that we've taken much earlier in life. In fact, I remember the first pick was around 50 rupees or so for Eternal per se, and has done a wonderful job for us. Not only that, but
absolutely.
We've also, so all these platform companies basically, so not only Eternal, but like a Paytm, which is again a platform company, or for that matter, a Car Trade, which you just mentioned, right? Again, a platform company. Different industries, but doing a phenomenal job in terms of exponential growth, right? And that is what excites us about this. In fact, this is a model which basically is what excites even the foreigners. I mean, the FPIs, when they come in, they look at such kind of stories because that's what differentiates India from a regular developed market as such. Yeah. So that is the second one. And the third one is platforms are normally, if the consumer base is huge, and India it is huge, right? I mean, you're talking about 350 to 400 million odd consumers or regular users of the internet and stuff like that, which are actually consumers, and they know how to do discretionary spend. So if you have that kind of a base, you're just scratching the bottom of the barrel today, right? You're not even gone beyond that in terms of the regular users which come to their sites and stuff like that. So I think the potential is humongous, and obviously it has to be managed well. In terms of competition, there'll always be some, there'll always be a few. But you look at globally how these industries are panned out, the initial way is that the winner takes all kind of an industry. But normally it is 2 or 3 player industry, normally which is the survivor as such. So I don't see any difference in India also. And you've seen that in the food delivery business. It's played out perfectly. There are only 2 players now. Same will happen with the quick commerce industry as such. I don't see many players remaining there because the burns are very huge out there, and to get the logistics right is a big effort. It's not very easy just because you set up a dark store, you'll be able to supply goods. You need to understand what SKUs, which ones are the most optimal kept. Otherwise, your working capital will shoot up and stuff like that. So that's what is playing out here. I think the smarter guys will survive and be winners, big winners.
Fair point. Yes. Let's shift focus, Mr. Irani, on a market that's really, really disappointed, the mid-cap and the small-cap space. I think this is a pseudo-record high on the Nifty 5, 7, 10 stocks moving up in unison, and multiple 52-week lows coming in the mid-cap and the small-cap space. Against this backdrop, Helios has launched a small-cap fund whose first portfolio will be revealed. Now, what's the thought process?
So, okay, Sharad, very interesting because what we also saw was that, by the way, the approval came much earlier. It was only now that we launched it as such, and touch with the response has been phenomenal. I mean, the asset garners were pretty huge, and you'll see that when they get disclosed on probably 7th, 8th of this month. But the fact is that we saw this massive underperformance. The underperformance of mid and small caps vis-a-vis the large cap has been literally at some 5-year historic lows, and that's what made us get up and see that where is the disconnect,
Yes.
what is happening out here. And we realized that in the small cap, if you look at the pure valuations, they look pretty stretched to that extent. But if you look at if you now looking at standalone valuation doesn't make sense. Frankly, you've got to look at the earnings growth also. So basically, you divide PEs with the growth, right? So then, when we looked at the PEG, the small cap universe looked the cheapest among the three as such. In fact, the most expensive, by the way, was the large cap universe because the earnings growth was really low and the valuations were also low, right? But the mid cap was the medium, not too far away from the large cap. But the small caps are a total cry out. I mean, as in they were, I think the peg was 1.1 as compared to a mid cap, a large cap peg of 1.7 price earnings to growth. That is what I'm talking about, right? So it was obvious that this is the time to launch. And frankly, I mean, as I said, we have this funnel, and our funnel was showing up quite a few small cap names. And we said, okay, now is the time probably to launch it, and that's why we did that. And the same, by the way, we did in our mid-cap fund too. The approval we got probably 6 months back, and finally we launched it in Feb end, and March was when we came up with the first NAV and stuff like that. And you've seen the performance. I mean, it's number one by far as what ICRA reports, though a very small period to look at, but that is what the ICRA universe shows us. They are a rating agency with us this rankings for most of the small caps and mid caps, and obviously all the mutual funds as such. So that's how it is, and we have no doubts.
Okay.
Looking at
I'll
what
talk about the mid
is.
cap.
Yeah.
Okay, mid cap. I'll speak in a moment. What was the AUM that you raised for the small cap fund which just closed?
I won't be able to disclose that, Chirinder. It was fairly good. So
Okay.
I just leave it there because it's not a public data which has been disclosed. It will come through when you see my first portfolio as such. So.
Okay, fair point. Okay, I think there's a party due from Helios AMC, and I'll tell you the reason why, ladies and gentlemen. Helios Midcap was launched in March of 2025, so that's 12 minus 3, 9 months old, and the returns since launch, hold your breath, are 31%. So a 10 rupee NAV is now 13 rupees, and the assets under management are 445 crores. And let's look at the portfolio here. Okay, how much of cash? 3%, that's okay. Okay, Hero, Uno Minda, Marico, Cumins, and MCX are the top performers, and you have in together 71 stocks. Okay, so Mr. Irani, this time the Christmas party is on you, and we are going to celebrate this phenomenal mid-cap return of 31%. So what was the logic in choosing the portfolio?
So, by the way, Shirinder, the AUM that you mentioned was probably a month old. You'll see that when the new AUM is reported, it is much higher than what you reported as such. But anyway,
okay.
So having said that, again, the same concept out here, Shirinder. I mean, we have this elevation investing philosophy, and in fact, it works wonders in small and mid caps, because in small and mid caps, normally you get carried away. A manager normally gets carried away by earnings growth and reasonable P's, but he doesn't go beyond that as such. As I said, that our philosophy ensures that we have quality built in for growth and value both at that front. That ensures that at least you will not get carried away purely by say valuations and growth. You will also undertake quality, and that is what I think sets us apart in the mid and small cap space, I suppose, and that's what helped us in getting this kind of a performance. The mix is not too different from what my, as in the industry mix is not too different from what my Flexi-Cap shows, but the overall overlap is also still very less. So that's how it is, and that's what. And by the way, one more thing that we made very clear is that there will be massive risk control out here, because liquidity is normally a very big problem when it comes to mid and small caps. So that's why we are keeping a cap on the mid and small stocks that we have. And one more thing, Shalinder, that is very different about our mid cap fund is that's a pure mid and small cap fund. The mid caps are slightly over 65-66%, which is what is mandated by SEBI. that if your category is that, you have to have 65-66% there. So that's how the mid caps are. And probably apart from one or two large caps, which also were because the mid caps that we owned became large caps, all the rest are small caps as such. So that's how we played this, and that's why this kind of a phenomenal return that you're seeing as such.
Okay, let me pat Mr. Irani on the back a little bit more. Helios Midcap returns for the last 6 months have been 14.34%, and it's ranked first in 51 mid-cap funds which have a 6-month horizon of investment. And of course, the equity mid-cap space has given a return of 5.2% in the last 6 months, and Helios Midcap has given a return of 14.34. That's a 900 basis point uptick over the category, and a little bit more over the 150 mid-cap index from the BSE. On that wonderful note, Mr. Irani, Merry Christmas to you. Of course, this Christmas has reached your Flexi-Cap and mid-cap fund holders a little earlier than most other purchases. But here's wishing you all the best, and here's hoping that 2026 is far better than the pain that we've seen in 2025. Thank you for your time, sir.
Thank you, Shailendra, once again, and season's greetings to you, your team, and your viewers, and thank you for the good wishes.
Of course, we look forward to meeting you in Mumbai. That, ladies and gentlemen, was Mr. Dinshaw Irani, CEO of Helios Capital, discussing the broader markets and his two main products, Helios Flexi-Cap Fund and the phenomenal Mid-Cap Fund. I hope you enjoyed the conversation. I'll be back at 2.
The local body elections in Maharashtra have exposed the divide within the Mahayuti like never before. A flying squad of the Election Commission raided Shiv Sena leader Shahaji Patil's office in Sangola on Sunday. The search went for an hour.